Welcome to StockMaven TV. Today, we're tackling a topic that's on everyone's mind. Are we in a stock market bubble right now? Some people believe the stock market is a sure path to wealth, while others call it a giant scam. So, what's the truth? And more importantly, are we heading for a crash? Before we dive in, let's clarify what a bubble actually is. A stock market bubble occurs when stock prices rise far above their actual value, often fueled by speculation and investor greed. These bubbles eventually burst, leading to sharp declines in prices and significant financial losses. So, is today's market inflated beyond reason? Stick around to hear the evidence and expert insights. There are clear signs that could point to a bubble in the current stock market. Let's break them down. Inflated stock prices. Many stocks are trading at price-to-earnings ratios that far exceed historical averages. When prices rise faster than the company's actual growth or profits, it's a red flag. Unsustainable growth patterns. We've seen unprecedented growth in sectors like tech, but not all companies in these sectors are profitable. Yet their valuations continue to soar, driven more by hype than fundamentals. Speculative behavior. The rise of meme stocks like GameStop and AMC, where prices skyrocketed based on social media hype rather than company performance, is a clear sign of speculative investing. Excess liquidity. Central banks have injected trillions of dollars into the economy over the past few years, creating excess liquidity. This has driven up stock prices, but what happens when the money flow slows down? These warning signs suggest that the market might not be as stable as it seems. To understand whether we're in a bubble, let's look back at history. The dot-com bubble, late 1990s, tech stocks surged as investors poured money into internet companies with little to no profits. When the bubble burst in 2000, the Nasdaq lost nearly 80% of its value. Many investors lost fortunes. The housing market crash, 2008. In the mid-2000s, home prices skyrocketed due to risky lending practices and speculative buying. When the bubble burst, it triggered a global financial crisis, with millions losing their homes and jobs. Tulip mania, 1630s. One of the earliest recorded bubbles, tulip mania, saw the price of tulip bulbs in the Netherlands reach absurd levels before crashing, leaving many financially ruined. These examples show that bubbles often follow a predictable pattern: euphoria, overvaluation, and eventually, a crash. So, how does today's market compare? Here's the most compelling evidence that suggests we might be in a bubble. The Buffett indicator, which measures the ratio of the total stock market value to GDP, is at its highest level ever, higher than during the dot-com bubble. This indicates that the market is massively overvalued compared to the size of the economy. Additionally, margin debt, or the amount of money investors borrow to buy stocks, is near record highs. High levels of margin debt often precede market crashes because leveraged positions are unsustainable in a downturn. Experts like Michael Burry, known for predicting the 2008 housing crash, have also issued warnings about speculative behavior in today's market. While no one can predict exactly when a bubble will burst, these indicators suggest we're skating on thin ice. So, what have we learned? There are several warning signs that suggest we might be in a stock market bubble: inflated stock prices, unsustainable growth in certain sectors, speculative investing behavior, historical indicators like the Buffett indicator and margin debt. If we are in a bubble, the implications for investors could be severe. It's essential to stay informed, diversify your portfolio, and avoid chasing speculative gains. Remember, markets can rise for a long time, but they can fall even faster. What do you think? Are we in a stock market bubble, or is this just a healthy bull market? Share your thoughts in the comments below. If you found this video insightful, make sure to like, subscribe, and check out my other video on investment strategies during volatile markets. Thanks for watching, and see you next time.